Gail with Traders Help Desk, and as you can see, I'm in the euro dollar, and this has an expiration at 8 a.m. and I have actually two strike prices. I think it will be below 0.0630 by 8 a.m. and I think it will also be below 0.626. Those are my two strike prices. Now notice that I've done one here so that you can watch the difference in the premiums, and then I've also done my standard 10 contracts. So we're going to wait and see what happens here. Okay, this is my 15-minute chart, and just a couple of things on here. Number one, you just made a higher high in the stochastics, but you made a lower high in price. That's hidden divergence. You also had volume divergence on the highs, so you can see that as price was making these highs, the buying volume, which is on the top, is decreasing. So you've got hidden divergence on the stochastics. You also have divergence on the buying side. Now notice I drew a line on the bottom. This would represent sellers. I'm not measuring the sellers because we were making higher highs. I'm actually measuring what is above the zero line, which is buyers. Below the zero line is sellers. In this case, buyers were decreasing, which is one of your entry signals. You can also see these red dotted lines correspond to the strike prices in Nadex. So I set it just, one tick lower. So I've got it at 1.0629 and 1.0625. So if price goes beneath these two dotted lines, then more than likely you are making money. As you can see, it's starting to move in my direction, and I just want to point out on the risk side, because I'm short, it would always be 100, which is the maximum payout on a binary, minus the average price here. So in this case, let's just say 59. So you basically have $41 of risk on that one contract, and then on the other one it's right at $45 of risk per contract. And again, this is moving down as we anticipated. Now it needs to continue down in order to maintain the profit. Now I just want to go back to this chart for a moment, because I want to highlight the reason that I thought this would come down in combination with the hidden divergence on the stochastics and the volume divergence. You also see that you have this line of white congestion dots. That typically tells me that price will come back and it will test this ATR right here. So we had diverging buying volume, we had hidden divergence here. Now I'm going to go ahead and set a profit target on this one, and I'm going to set it at 10. And what that means is if the buy price comes to 10 and there's a buyer that's willing to pay $10, then I will exit this trade. And I can also do the same thing for this one. And because we are short, and some people do not realize this, what you are watching is the buy price, because we have an order sitting there at $10. So if the buy price gets to $10 and there's enough buyers, then this position will automatically exit. Okay, as you can see, the buy side did fill the order at $10. So now I'm waiting on the second strike, which is at 626, for that order to fill as well. Now I just want to point out, some people want to know, how did you know this trade was there? And the reason is because, as you can see right now on the euro yen, it's telling me that it's overbought. At the time of the euro dollar trade, it was telling me it was overbought right here. So this radar screen allows me to monitor everything. And what I want to do is see something that is overbought, that is either at a congestion dot or at an ATR, because it's my entry points. Then I simply go and look at it and see if it is something I would like to trade or not. Okay, as you can see, it's popped down and hit my profit target, and I'm out of the position. So you can also see that it's getting overextended here, and this is a good reason, because these numbers can change very quickly when you're 2 strike prices in the money, which I am in this case, and it can pop down, hit your profit target, get your order filled, and then go right back up. So this is one of the reasons I just go ahead and set a profit target when I'm in the trade. And if you also notice, and this is something that is dependent on how much time is left in the binary as well, this was our strike price that we were waiting to get filled at, and as you can see, it moved down 2 strike prices. In other words, it went under the second strike. And this is something, if you watch when it happens, typically when it moves below the second strike price is when your profit target will get hit. Now that's not a given, because it also depends on, how much time you have until expiration. I typically do not hold until expiration unless I'm 3 to 4 strike prices in the money. But a lot of times by then you've already hit a profit target. So generally what I want is for price to move 2 strikes from my strike. So this was my strike price, and price moved down 2 strikes, went under it, and that's what gave me my profit target.